Hello, friends. Imagine sitting in your living room this June when your phone buzzes with an urgent text message from your bank. You pick it up, look at the screen, and see an alert that says, "Did you authorize a Zelle transfer of $2,000? Reply Y for yes or N for no." You panic. You know you didn't send that money, so your thumb flies to the keyboard and you reply with a capital N for no. Immediately, your phone rings. You look at the screen, and the caller ID says Chase Fraud Prevention. The man on the other end is incredibly polite. He sounds professional, calm, and reassuring. He tells you that your account has been compromised, and to protect your remaining funds, you need to use Zelle to transfer the money back to your own name. It sounds perfectly logical, but the man on the phone is not from your bank. He is a scammer in an overseas boiler room, and the exact second you hit send, your life savings are gone forever. For years, banks refused to refund this money. But right now, in 2026, the federal rules for disputing these instant transfers have fundamentally changed. I want to be perfectly clear right from the start. This is not a government stimulus program or a fake IRS warning. This is a documented multi-million-dollar banking crisis involving the Zelle payment network and TIJ. And the defense strategies we are covering are the official federal dispute protocols regulated by the Consumer Financial Protection Bureau. Make sure you stay with me until the very end of this video because I am also going to reveal what I call the silent enrollment trap. This is how your bank secretly linked your checking account to Zelle without you even knowing it. And I will show you the exact button you must click inside your app today to permanently lock that digital door before a criminal finds it. If you are new to the channel, please take 1 second right now to click the subscribe button. The banking laws and federal consumer rules are changing rapidly every single year, and the government is never going to call you to explain your options or protect your money. The people who subscribe find out about these changes in time to defend their retirement accounts, while the people who don't subscribe usually find out after the money is already gone. Don't let that happen to you. Subscribe now, protect your hard-earned savings, and let's make sure you have the real facts. If you accidentally reply to that first fake text message, your phone will ring within 60 seconds, launching the most dangerous psychological illusion in modern banking. It all starts with what security experts call the SMiShing trigger. Scammers are blasting out thousands of automated text messages that perfectly mimic the automated fraud alerts sent by real financial institutions. They use generic high-panic wording, like bank fraud alert. Did you authorize $1,500 via Zelle to John Doe? Reply Y or N. The text is designed solely to induce panic and confirm that your phone number is active. This warning applies to anyone with a United States-based checking account. You do not need to actively use the Zelle app to be targeted, as most major banks integrate this service directly into their standard checking accounts by default. Let's look at a real-world example of how this plays out. Take Robert, a 71-year-old retired machinist living in Texas. He is sitting at his kitchen table when he gets a text message appearing to come from Wells Fargo Security asking if he just authorized a $2,500 Zelle payment to an unfamiliar name. Robert panics because he knows $2,500 is a massive chunk of his monthly fixed income. He replies, "NO" to the text message. Now let's walk through the exact dollar math of that choice. If Robert had ignored the text, deleted it, or done absolutely nothing, his actual financial risk in that moment would have been $0. His account hadn't actually been breached yet, but because he typed that reply, the scammer's automated system instantly flagged his number as a live, fearful target. Within 1 minute, they called his phone, executed a sophisticated psychological manipulation, and walked him through a process that caused him to wire them $2,500. Robert lost $2,500 of his Social Security savings entirely because he engaged with that initial fake text message. You need to know a critical variation that scammers are using right now across different states. They frequently buy information from recent corporate data breaches, which means the fake text message might actually include the correct last 4 digits of your actual debit card. Seeing those 4 numbers makes the message look undeniably real. But the presence of your card numbers does not mean the text is actually from your bank. Here is the exact action step you must take. If this happens to you, first, receive the text message about a pending Zelle transfer. Second, recognize immediately that this text is the bait. Third, do not reply and no. Replying signals to their software that a live human is on the other end, which triggers the phone call. Fourth, Delete the text message from your phone completely. Once they have you on the phone and you believe they are the bank, they execute the actual theft using a brilliant technological trick that bypasses all your standard security warnings. They do this through caller ID spoofing. Criminals use voice over Internet Protocol technology, or VoIP, to fake the numbers that appear on your telephone. They can type the actual public 1-800 customer service number of your specific bank directly into their computer software. When your phone rings, your caller ID will literally display Bank of America or Chase Fraud Department. You are looking at the true verified bank phone number right there on your screen, but the person speaking to you is a criminal. Let's look at Susan, a 68-year-old former school teacher in Ohio. She is careful with her money. When her phone rings and her screen displays Citibank fraud, she answers it confidently. The man on the line sounds incredibly professional. He already knows her home address and the name of her bank. He tells her he is looking at a suspicious charge and needs to verify her identity before blocking it. He says, "I am sending a secure verification code to your phone right now. Please read those 6 digits back to me so I can lock your account." Susan looks at her phone, sees the text from Citibank with a 6-digit code, and reads it out loud to the representative. Here is the real dollar math behind that mistake. That code was not a verification check. It was actually the bank's automated password reset authorization code. The scammer had entered Susan's username into the real Citibank website and triggered a password reset. By reading those numbers out loud, Susan handed the criminal the keys to her digital vault. The scammer used the code to log into her account, change her password, and completely drain her $4,000 checking balance within minutes. If Susan had simply hung up the phone and dialed the customer service number printed on the back of her physical plastic card, she would have reached the real Citibank, verified her account was perfectly safe, and saved her $4,000. Remember this vital situation variation. Even if you have your bank's real phone number saved directly into your phone's personal contact list, a spoofed incoming call can completely bypass that system and show up under your saved contact name. The screen in your hand is a digital illusion. When you receive this call, you must follow these exact steps. Step 1, answer the phone and listen as the representative claims they are stopping a fraudulent transfer. Step 2, notice the moment they try to verify your identity by asking for a one-time passcode sent to your device. Step 3, hang up the phone immediately no matter how polite, urgent, or professional they sound. Step 4, turn over your physical debit card, dial the 1-800 number printed right there on the plastic, and speak to the real fraud department. Once they have you on the line and you believe you are speaking to a real bank employee, they execute the actual transfer of your funds using a psychological trap that makes recovery incredibly difficult under old banking rules. They execute this through the Zelle reversal illusion, commonly known as the pay-yourself trap. The scammer tells you that because your account is currently being compromised by hackers, the only way to reverse the fraudulent transaction and secure your money is to send it back to yourself. They will instruct you to open your banking application on your smartphone, navigate to the Zelle section, and type in your own mobile phone number to send, say, $3,000 back to your own name. What they do not tell you is that while they had you distracted on the phone, they used the security code you gave them earlier to log into your profile, secretly unlink your phone number from your real checking account, and link your phone number to their offshore burner account. Let's look at the dollar math for David, a 74-year-old retired veteran. The imposter tells David to send $3,000 to his own phone number via Zelle to reverse an active hack. David opens his app, enters his own mobile number, and hits send, fully believing the money is just moving from his checking account into a secure temporary holding folder under his own name. Because the scammer had already routed David's phone number to their own burner account, the second David hit send, that $3,000 instantly left his bank and landed in the criminal's account. It was withdrawn immediately. David lost $3,000 of his fixed retirement income in exactly 5 seconds. Here is a critical situational variation you must look out for. Sometimes the bank's real software detects a new device or an unusual transfer and pops up a clear warning on your screen that says, "Are you sure you want to send this money?" The bank cannot reverse Zelle transfers. The scammer on the phone will immediately try to neutralize this. They will tell you, "Please ignore that automated pop-up alert. It is just a generic system message, and I am manually clearing that transfer on my end right now to make sure it is safe." Do not listen to them. That pop-up warning is your absolute last line of physical defense. If you find yourself in this situation, you must execute these 4 actions immediately. First, hear the instructions telling you to pay yourself or to send money to a safe government locker. Second, realize right then that no legitimate bank in the United States will ever ask you to send money using Zelle to fix a fraud issue. Third, stop the transaction entirely. Fourth, close your banking application immediately and shut down your phone. When you finally realize you have been tricked, you will naturally call your real financial institution to report the theft. This is the exact moment most seniors hit a devastating legal technicality that allows banks to flatly refuse your request for a refund. It is called the Regulation E trap. Under the Federal Electronic Fund Transfer Act, which is governed strictly by Federal Regulation E, banks are only legally required to reimburse you for what the law defines as an unauthorized electronic transaction. An unauthorized transaction means someone broke into your account without your permission while you were asleep, like a hacker stealing your data, and moved the money without you knowing, but because the scammer tricked you into opening your own app, entering the amount, and physically pressing the send button with your own thumb, the bank's compliance software automatically classifies that payment as authorized. Historically, the banks argued that if you authorized the transaction, even if you were completely lied to and manipulated by a criminal, the bank legally washed its hands of all financial liability. Take the case of Mary, a 69-year-old grandmother. She was tricked by an imposter into sending $1,500 to what she thought was a safe account. When she discovers the fraud, she calls her bank's customer service line, highly upset, and says, "I was scammed. I sent $1,500 to a thief." Let's look at the dollar math of how the bank handles that call. The frontline representative notes down Mary's exact words. "I sent." The system automatically codes the claim as an authorized push payment because Mary admitted to pressing the button herself. Her fraud claim is formally denied within 24 hours. Mary loses her $1,500 permanently, with zero assistance from her bank. If Mary had known how to leverage the brand new federal imposter rules, she could have fought back for a full reimbursement. Here is a massive legal variation you must understand. If a thief steals your physical credit card and charges $1,500, you are protected by a completely different law called the Fair Credit Billing Act, which lets you easily reverse scam charges. But Zelle does not run on a credit network. Zelle is a direct cash transfer from your checking account. It is the digital equivalent of walking into your living room and handing a stranger a suitcase full of physical $100 bills. It cannot simply be rolled back or canceled. To beat the bank at their own game, you must follow these specific steps during the phone call. Step 1. Call your bank's real fraud department using the number on your card to report the theft. Step 2. Do not yell at or argue with the frontline customer service representative. They are required to follow a strict legal script written by the bank's corporate attorneys. Step 3. Understand clearly that if they can get you to say you sent the money, they will label it authorized and deny your claim. Step 4. Prepare yourself to immediately escalate the claim using the specific new federal guidelines designed to protect you. Because this exact loophole was destroying the financial lives of thousands of seniors across the country, the federal government finally stepped in and forced financial institutions to change their rules for this one specific type of fraud. This change is the brand new CFPB reimbursement mandate, and it gives you a powerful weapon to fight back. Following massive, sustained pressure from the Consumer Financial Protection Bureau and members of Congress Early Warning Services, which is the corporate entity that owns and operates the Zelle network, and is itself owned collectively by the nation's largest commercial banks, instituted a mandatory new policy. They are now required to reimburse victims of what the government classifies as a bank impersonation scam. The rule states that if a criminal explicitly claims to be a representative of your specific bank's fraud department and uses that specific identity to facilitate the theft, the transaction can no longer be dismissed as a simple authorized mistake. The bank must step in and refund the stolen money. Let's look at how John, a 72-year-old retiree in Nevada, used this new rule to save his savings. John lost $2,000 to a scammer using the pay yourself trick. He walked into his local branch, spoke to a frontline teller, and was told that because he authorized the transfer himself, the bank would not return his money. Instead of walking away defeated, John filed an official fraud claim online and used the exact legal phrasing required by the federal guidelines. He stated, I am the victim of a bank impersonation scam. The caller spoofed your official caller ID and explicitly claimed to be an authorized representative of this institution. When the local branch still hesitated, John went directly to consumerfinance.gov/complaint and filed a formal federal complaint with the CFPB. Let's look at the dollar math on this escalation. The moment a consumer files a formal CFPB complaint, it bypasses the local branch and goes directly to the bank's executive resolution team. 10 days after filing, the bank's executive office called John, completely overturned the previous denial, and deposited the $2,000 back into his checking account. John recovered 100% of his stolen money purely because he knew how to hold the bank accountable to the federal regulator. You must remember this crucial situation variation. This mandatory reimbursement policy strictly applies to bank impersonation fraud. If you use Zelle to send $2,000 to an internet scammer claiming to sell a puppy, or a scammer running a fake contractor ring, or someone pretending to be your grandson in trouble, which is the classic grandparent scam, the bank will not refund you a single dime. The new policy covers bank fraud department spoofing only. To protect your rights under this new rule, you must execute these 4 steps in order. First, file your official fraud claim directly with your financial institution. Second, use this exact legal phrasing verbatim. I am the victim of a bank impersonation scam. The caller spoofed your caller ID and claimed to be a representative of this institution. Third, if the bank denies your claim locally, immediately log on to the internet and file a formal complaint with the CFPB at consumerfinance.gov/complaint. Fourth, track your complaint number and await the mandatory response from the bank's corporate offices. But even with this powerful new federal protection in place, you will still lose your entire retirement account permanently if you miss a separate, brutally strict legal deadline that the banks enforce with 0 exceptions. This critical time limit is the strict 60-day legal deadline, also known as the EFTA reporting window. Under Federal Regulation E, you do not have unlimited time to discover and report electronic banking fraud. You have exactly 60 days from the specific calendar date the bank transmits the monthly statement containing that fraudulent transfer to report it. If you discover the theft and report it on day 61, you lose every ounce of your federal consumer protection. Your legal liability becomes completely unlimited, meaning the bank can walk away, and you lose your money forever with 0 legal recourse. Let's look at the heartbreaking case of Linda, a 75-year-old widow. Back in March, Linda was targeted by an imposter and scammed out of $4,000 through a forced Zelle transfer. She felt incredibly violated, but she was also deeply embarrassed, so she didn't tell her children and she didn't call her bank. She hoped she could just figure out a way to make up the missing money on her own. In June, she finally built up the courage to call her bank to report the theft and ask for a reimbursement. Let's look at the cold dollar math of Linda's timeline because the period from March to June is roughly 90 days. Linda completely blew past the 60-day federal legal window. The bank's compliance department issued a formal legal denial of her claim based strictly on the EFTA statute of limitations. Linda's $4,000 loss became permanent. If Linda had swallowed her pride and reported the transfer on day 5 instead of day 90, she would have locked in her statutory federal right to force a reimbursement investigation. You must keep this situational variation in mind regarding how federal timelines manage different electronic assets. Under Regulation E, if you lose your physical plastic debit card and report it stolen within 2 business days, your maximum out-of-pocket liability is capped at $50. If you report it between 3 days and 60 days, your maximum liability jumps to $500. But for Zelle imposter scams, reporting the incident immediately ensures the bank cannot use delayed notification as a legal escape hatch to deny your bank impersonation claim. To make sure you never fall outside this protective window, you must follow these 4 steps. Step 1. Do not wait until the end of the year or tax season to balance your checkbook. Step 2. Log into your account or check your statement at least twice every single month. Step 3. The exact second you see a Zelle transfer you do not recognize, call the customer service number on the back of your card immediately. Step 4. Write down the exact date, the precise time you called, and demand a formal claim confirmation number from the agent. If all of this legal maneuvering and monitoring sounds incredibly stressful, and you are someone who never uses Zelle to send money to family or friends anyway, there is one ultimate defense strategy you can execute right now from your kitchen table to completely eliminate this risk. This is the payoff to the tease I gave you earlier, the silent enrollment lockdown, which simply means unlinking your Zelle profile entirely. You do not have to go to an app store and download a separate application called Zelle to be completely vulnerable to these criminals. The nation's largest financial institutions actually own the Zelle network, and because they own it, they have embedded the software directly into your standard mobile banking application. Millions of American seniors are silently enrolled in Zelle simply because they have an active checking account and a mobile phone number on file with their bank. If you do not actively use this feature, you must take action to disable it and lock the door. Look at Robert, an 80-year-old retired civil servant who prefers using paper checks and cash. He has never used a digital payment app in his life. After learning about this loophole, he logs into his primary Chase banking app on his phone, clicks through the settings, finds the Zelle Enrollment tab, and completely unlinks his mobile phone number and his email address from the service. Let's look at the dollar math of that 5-minute choice. 2 months later, an international cybercriminal syndicate compromises Robert's online banking password through a widespread corporate data breach. The scammer logs into his account from an outside device and immediately attempts to execute an instant, irreversible $5,000 Zelle transfer to drain his balance. But because Robert had actively unlinked his profile and blocked the service weeks prior, the Zelle transfer module fails completely. The system blocks the movement of cash. The scammer is left empty-handed. Robert's simple security sweep successfully shields his entire $50,000 retirement checking account from instant digital theft. Be aware of this final state and situational variation. While major national institutions allow you to toggle this service off with a digital button, some smaller local credit unions and community banks require you to call their customer service desk directly to disable the feature, because they do not include an unenroll switch in their basic app. It is worth every second of a 10-minute phone call to permanently wipe this liability off your account. Here is your exact step-by-step action plan to execute this lockdown today. First, log directly into your primary digital banking application or official bank website. Second, navigate to the menu labeled Transfer and Pay, or go straight to the Zelle Settings tab. Third, locate the section marked Manage Profile or Email and Mobile Preferences. Fourth, unlink or toggle completely off your mobile phone number and email address from the Zelle network. Fifth, if your app doesn't have this option, call your bank's customer service number directly and instruct them to place a hard administrative block on all Zelle transfers on your account. Let's review what we covered today so you have the complete defense plan fresh in your mind. We exposed how scammers use the fake fraud text to bait you into responding, and how they use caller ID spoofing to make your phone look like it's your actual bank calling. We deconstructed the dangerous pay yourself trap, where thieves trick you into routing your own cash into their burner accounts, and we looked at the regulation loophole banks use to label your stolen money as an authorized transfer. We walked through how to use the brand new CFPB bank impersonation mandate to force the executive teams to refund your money, why you must file that claim within the strict 60-day federal deadline, and how to permanently protect your savings by unlinking your Zelle profile entirely. A legitimate bank will never ask you to transfer money to protect your money. By unlinking Zelle and escalating Bank Imposter scams directly to the CFPB, you completely neutralize the scammer's ability to steal your retirement.